What if I told you that the newest AI model, GPT-5, might actually be the reason some traders lose money instead of making it? That's right. Even though GPT-5 is being hyped as the future of artificial intelligence and trading automation, there are some very real dangers that most people don't talk about. And here's why you need to stay until the end of this video. I'm going to share a special tip, a way to protect yourself from one of GPT-5's biggest weaknesses. This tip could save you thousands of dollars if you ever decide to use AI trading bots. So stick with me. In the next few minutes, I'll show you the 5 biggest reasons GPT-5 could fail your trading strategy, and what you can do to avoid these mistakes. By the way, welcome to TechMoneyAI, the channel where we help you invest better with the power of AI. Don't forget to hit the subscribe button so you never miss our weekly breakdowns, tutorials, and trading strategies. And be sure to check out our website, TechMoneyAI.com, where you can grab our AI Trading Starter Toolkit to help you take your first steps into smart, automated investing. Okay, here we go. Reason number 1. GPT-5 doesn't always understand the market. Let's start with the first big problem. GPT-5 isn't built specifically for trading. Here's the truth. GPT-5 is a general-purpose AI model. That means it's designed to process and generate language, not necessarily to understand the complexities of financial markets. Sure, it can read data, interpret charts, and summarize financial reports, but at its core, it doesn't actually understand how the market works in the way a human expert does. This creates a serious risk. Imagine asking GPT-5 whether a sudden drop in the S&P 500 is a buying opportunity or a warning sign. It might give you a very convincing explanation, but that explanation could be based on incomplete or outdated patterns. Markets aren't static. They're influenced by politics, emotions, breaking news, and unexpected events like global crises. GPT-5 might fail because it interprets data logically, but misses the emotional side of trading that often drives short-term price action. The solution? Never rely on GPT-5 as your only source of truth. Instead, use it as an assistant. Let it help you summarize, analyze, or test ideas, but always confirm its conclusions with trusted financial sources in your critical thinking. Reason number 2. Overconfidence in GPT-5's reasoning mode. GPT-5 introduces a new and exciting feature, reasoning mode. This allows it to break down problems step by step and give you a more structured explanation of its answers. That sounds amazing, right? But here's the catch. Just because GPT-5 explains something clearly doesn't mean it's correct. This is one of the most dangerous issues, AI hallucinations. GPT-5 can create logical-sounding but factually wrong answers. In trading, that could be devastating. For example, you might ask GPT-5 to explain why Bitcoin is dropping. It could generate a very convincing answer like, Bitcoin is falling because institutional investors are rotating into bonds due to new Federal Reserve policy changes. Sounds legit, right? But what if there were no such policy change? What if the real reason was simply a whale liquidating a large position? If you trust GPT-5 blindly, you'll make trading decisions on false logic. And when real money is on the line, that's dangerous. The solution? Treat GPT-5 like a junior analyst. Listen to its reasoning, but don't act until you verify with actual market data, reliable news sources, and your trading plan. Reason number 3. GPT-5 can be too expensive for active trading. Here's something most beginners don't realize. Using GPT-5 at scale isn't cheap. If you're running a trading bot that's making hundreds or thousands of API calls every day, those costs add up. GPT-5 is more advanced and more expensive than previous models, especially if you're using its higher-tier versions like GPT-5 Pro. For traders who use high-frequency strategies, where speed and cost efficiency matter, GPT-5 could actually eat into your profits before you even realize it. Think about it like this. If you make $500 in trading gains but spend $300 on GPT-5 queries, your net profit is only $200. And that's if everything goes well. The solution? Be smart about when and how you use GPT-5. Don't rely on it for every single micro trade. Instead, use it for bigger picture analysis, like interpreting news events, analyzing sentiment, or testing strategies. For faster, rule-based trades, use lighter bots that are more cost-effective and efficient. Reason number 4. GPT-5 still needs human oversight. Here's something nobody wants to admit. GPT-5 isn't perfect, and it never will be. Yes, it's more advanced than GPT-4. Yes, it can handle more context, process bigger datasets, and reason through problems. But it's still not capable of fully replacing a human trader. Why? Because trading isn't just about logic. It's about judgment. For example, a bot might say, based on sentiment and price action, this stock looks bullish. But you, as a human, might know that the company's CEO is about to testify in court, or that regulators are investigating them. GPT-5 doesn't have insider knowledge or true foresight. It can only work with the data it's trained on or the inputs you feed it. That's why one of the biggest reasons GPT-5 could fail your trading strategy is if you let it run completely unsupervised. The solution? Think of GPT-5 as your co-pilot, not your autopilot. Let it assist, automate, and analyze, but always review its decisions before letting it control real money. Reason number 5. Security and data privacy risks. Finally, one of the biggest overlooked risks, security and data privacy. When you connect GPT-5 to your trading systems, you're essentially letting a third-party AI model interact with sensitive financial information. If you're not careful, you could expose your strategies, account details, or trading patterns. Even worse, poorly designed integrations could allow hackers to exploit vulnerabilities. Imagine someone hijacking your GPT-5 trading bot and draining your account. It sounds extreme, but in cybersecurity, anything is possible. The solution? Always prioritize security. Use trusted platforms, set strict API permissions, and never feed GPT-5 sensitive data it doesn't need. Protect your accounts with strong authentication and monitor your bot's activity regularly. Special tip to protect your trading strategy. As promised at the beginning, here's the special tip. If you want to avoid the biggest risk of GPT-5 failing your trading strategy, never give it full execution control. Instead, use what's called a human-in-the-loop system. That means GPT-5 can suggest trades, explain its reasoning, and even draft execution orders, but you make the final decision. This one step can save you from the most common disasters. You get all the benefits of GPT-5's speed and analysis without the danger of it going rogue with your money. Conclusion: why you should stay engaged with TechMoneyAI. So let's recap the 5 reasons GPT-5 could fail your trading strategy. 1. It doesn't truly understand markets. 2. Its reasoning mode can still hallucinate. 3. It can be too expensive for active trading. 4. It still needs human oversight. 5. There are real security and data privacy risks. But here's the good news. Every single one of these risks can be managed if you know what you're doing. That's why you should stick with us here at TechMoneyAI. We'll show you how to avoid these pitfalls, use GPT-5 responsibly, and build a smarter, safer trading strategy. Don't forget to subscribe to this channel and share this video with a friend who's interested in AI trading. And make sure to visit TechMoneyAI.com to grab your AI trading starter toolkit. Remember, our mission is simple: invest better with the power of AI.